You have been a big bull on Bitcoin.
Yeah.
We had some folks that some people know on our show earlier this week. Becky was out in Omaha. I want to show you what they had to say if we could roll the tape on Bitcoin from Mr. Munger and Mr. Buffett.
The asset itself is creating nothing.
I think it's a scumball activity.
I would short it if there was an easy way to do it.
So there you have it. You have Bill Gates, Warren Buffett, Charlie Munger. One of them was calling it a scumball activity. The other saying, Bill Gates saying he would short this thing if he could. And you're saying they're all wrong.
Yeah.
Explain.
Well, look, not everybody is right all the time. And I think we have to acknowledge that we all have biases. And look, I'm a disciple of Buffett and Munger. And one of the things that they have said for years, which I believe, is you define a circle of competence and you stay within it. And I think it's been clear in his entire investing career that technology is not in his circle of competence. And so the only technology name that he's owned is Apple. I mean, you could claim that IBM was a technology company. That's borderline.
It's out of that. That didn't work anyway.
Right.
And Apple, I was thinking that if he got in Bitcoin, if he eventually got in Bitcoin, when he eventually got into Apple, it'd already be at $1 million probably.
Probably.
But Chamath, just going back to this, I don't think he looks at it as a technology. I think he looks at it as an asset class that he would put in a similar class with gold. Just it's a non-productive asset. It's an asset that is only worth more if other people agree to pay more for it. That's the type of issue that he's talking about.
Which I also agree with. I think it is exactly that. I think it is a replacement to gold. But again...
But you like gold. You're saying you like non-productive assets.
I like in a portfolio, again, my portfolio is 99% risk on, 1% risk off. And in that 1% risk off bucket, I think that something like Bitcoin is really important. Why? Because it is not correlated to the rest of the market. And the biggest thing that's changed...
You do not believe that the success of Bitcoin over the past several years has been correlated to the market? I would say not directly correlated, but clearly the idea that there's as much liquidity and cash sloshing around in the world has allowed people to buy into Bitcoin in a way that they wouldn't have, frankly, if the market...
That's different than being correlated to a strong economy or earnings.
But there is
that's a liquidity argument. That's not a correlation.
I've been in the Bitcoin market since 2012. And I feel like I'm in two different universes. I need a passport to go between the Bitcoin world and my regular world. These are not the same people. And what I would tell you is the people that owned Bitcoin in 2012 all the way up to now, the majority of those people view it as a hedge to the traditional financial infrastructure. Whether that's true or not is unclear, but that's how we've all viewed it. Separately, what Joe says is absolutely right. There's a big difference between correlation and liquidity. And the reality is all of these financial assets in the traditional markets are fundamentally correlated. We saw that in 2007. Everything broke down. Things that we thought were hedges went away. And so I think it's really important to not forget what happened there. So in 2018 or 19, heaven forbid we go through another cataclysmic financial event, we are going to see the same fundamental correlation. And so again, I ask, why would it not make sense to have a non-correlated hedge? For a small amount of this is about buying insurance. It was the same reason why in 2007 and 8, the folks that bought simple insurance bought some CDS, looked like heroes.
Buy gold. I mean, at least gold's got a 3,000-year, 10,000-year record of being a store of value. I mean, I think that's the other thing Buffett's saying. There's no reason to think this is a store of value.
I think that's a fair point, but I think these are not exclusive decisions. And for this younger class of entrant into the market, they probably don't want to buy gold. In fact, they don't want to buy gold, and they want to buy something that's much more digital and reflective of their values.
How do you feel, though, about the idea that Charlie sort of suggested, that there's something sort of scummy about that, or that there's a lot of scum in the crypto world right now, and that there's a lot of people who have been sort of sucked into this world, that have bought into this world by some folks who may not be as...
Look, I think it's really unfair to not understand something and then to disparage it. Again, I think he's exceptional. I think Warren Buffett is exceptional. I think Bill Gates is exceptional at what they do. And I think it's fair to say that in 30 or 40 years, if I'm, a vibrant, successful investor, and if I'm back on this show, the idea that I know what's happening 30 or 40 years from now, as well as some other new 40-year-old or 30-year-old entrant into the market, is just not true. The reality is things change.
200, and everybody was laughing at me on CNBC every time I would talk about Bitcoin. Where is it going? It's probably going to 100, then 150, then 200,000. In what period? I don't know. 5 years, 10 years, but it's going there. And the reason is because every time you see all of this stuff happening, it just reminds you that, wow, our leaders are not as trustworthy and reliable as they used to be. And so just in case, we really do need to have some kind of, insurance we can keep under our pillow that gives us some access to an uncorrelated hedge. And it's going to eventually transition to something much more important. But for right now, you're just getting all these data points that prove this thing. It's just the fabric of society is frayed. And until we figure out how to make it better, it's time to just have a little schmuck insurance on the side. And everybody's running in. It's just an incredible thing. I could never have imagined it.
Good to be a schmuck, I guess, if you got in early and it goes to where you think it's going to go. The other rocket I want to talk to you about, and I know people are interested in this, Virgin Galactic, the company, maybe it was your first SPAC deal. I think it was. You sold a fair amount of that, 38% or so, 40% around there. Why?
No, it was less than that. I sold a portion, 3.8 million shares of just the PIPE, my overall holdings. And it was literally just to make sure that I had the right liquidity to do all the things that I planned to do in 2021. But I really believe in that business. It's an incredible team. It's an incredible product. I think the way that they're thinking about it, our CEO, Michael Kohlglazer, is just so impressive. One of the top executives from Disney that we were able to lure over. The team he's building is amazing. I'm really, really excited about that business, and I'm just really proud to be around him.
I ask you because some people took that sale as maybe a lack of going to go. I'm sure you understand that.
Yeah, I mean, look, at the end of the day, if and when, I think it's probably more when than if, I have 10 times the capital that I do now, I'll be able to manage my liquidity in a different way. But, at the end of the day, I'm trying to move a lot of balls forward. I'm making multiple billions of dollars of investments this year into climate change. I'm going to try something really disruptive in student loans. And all of that takes money. And so, I just have to be able to manage everything in my infrastructure to make sure that I can do all of these things. And that's what it was.
You tell us about.
What about crypto? Does that ever become an actual means of transacting?
Yeah.
It does still. And I said crypto. Am I allowed to say crypto? I hope I'm allowed to say crypto. Can I bring it up?
I would really like Bloomberg to take this article that I wrote for them in 2013 out of their paywall. But basically, my view at the time, which I've held since today, haven't changed, is that everybody should probably have 1% of their assets in Bitcoin specifically.
Or crypto.
I still believe that today. And I think it is just a fantastic hedge. So if you go back to the conversation this morning, when you see the amount of leverage the financial industry is running, and you think about all these dislocations and all these exogenous things that are happening that you can't predict, there's a lot of risk to the downside. And it would be great that an average individual citizen of any country in the world has an uncorrelated hedge. And I've said this repeatedly ad nauseum on this show. Every financial instrument is correlated.
But Buffett,
it's all fake, except Bitcoin,
but Chamath,
which is fundamentally
an uncorrelated hedge that Warren Buffett says has zero value, zero inherent value, unless someone pays more for it.
I think he's an exceptional person. I've learned an enormous amount, both from afar and the few interactions I've had with him. He is completely wrong and outdated on this.
Shouldn't the price have gone up during this coronavirus situation?
Haven.
It went down.
Like gold. If it was really digital gold.
I think that you have to look more at volumes. These are not necessarily event-driven strategies, meaning you don't
You
want
just called it digital gold.
No, he didn't.
I didn't say that.
No, he didn't.
That's
what people say.
I don't think you buy. I don't think when you wake up and you see a coronavirus scare in the Dow down 2,000, you should not be going in and buying Bitcoin. That is an idiotic strategy. I think a reasonable strategy is to say 1% of my net worth should be in something that is completely uncorrelated to the world and how the world works. You quietly and quick, over some number of time, accumulate a position, and then you just never look at it again. And hope that insurance under the mattress never has to come due.
Right.
But if it does, it will protect you, because then that thing will be hundreds of thousands or $1 million a coin.